book, Tracy, so we can get that going.
Great. Okay, great. And as we get started, want to give a reminder for everybody, if you haven't, to mute yourself as we get started, because if there's sound on, you often it will take the place of the speaker. So make sure you mute yourself. We have someone, Samantha Farmer is on Facebook. So if you want to leave questions or anything there, we'll be getting them off Facebook as well. And we'll be ready to start in just a second, but we're so glad everybody is here. It's hard to believe. Shirley, this is the last Women Rise of the year. I'm not sure where this year has gone. So, all right, good morning, everyone, and welcome to Women Rise. I'm Tracy Irby. I'm the director for TWU, Center for Women Entrepreneurs. We're so glad to have everybody here, and we have several people that are here for the first time, so welcome. Tell you a little bit about our center. We were funded in 2015 by the state legislature just to help promote women in entrepreneurs anywhere in the state of Texas. And we do that through small business advising, funding. We have several grant programs, networking, and events like this. And we do research into women in the workforce and women entrepreneurs as well. The Center for Women Entrepreneurs is part of the Jane Nelson Institute for Women's Leadership. The Jane Nelson Institute is dedicated to preparing women to take on successful roles in business and public service to ensure women have the education to establish careers as successful C-suite executives, the skills for building entrepreneurial businesses, and the framework needed to run for public office. So again, we're so happy everybody's here today. Donalisa Stinyard is our program coordinator, and she'll be taking questions if you want to put those in the chat box. And again, we'll also take questions from Facebook as well for those of you that couldn't log in. So if each of you would like, you can put your name and business link in the chat box as well. And let me get ready to introduce our great speaker. So today we have Shirley Staten with us. She has over 30 years of sales and customer service experience. Throughout her career, she has taken pride in recruiting and coaching individuals to achieve personal and professional goals. As a customer service and sales professional, Shirley is committed to coaching small business owners and sales professionals to execute strategies that include customer service techniques to improve overall service levels, efficiencies, and ultimately sales. So Shirley, we are so happy to see you this morning.
Good morning. Thank you. Thank you again for the opportunity, Tracy and Donalisa. I'm really excited about today, and I hope that the session is informative and gives the ladies some ideas on things that they can do to ultimately increase their sales within their organization. And at the end of the day, we want them to be more profitable. So I'm going to share my screen and go through the presentation. And if time permits, we may even do a little exercise. So I may ask for one volunteer to go through the exercise that I follow when I'm working with clients on actually digging a little deeper to set goals. So here we go. So again, I've been, in addition to what Tracy said, I've been with AvaCoach almost a little over 3 years now, but have been coaching for a lot of years in my previous life in corporate America. Today's session, wait, I need to get rid of this screen. Bear with me one moment. Okay. Now, okay. So today's session I'm going to follow some of the processes that I usually follow when I'm working with a client on creating their strategic plan. There's, excuse me, more than one goal that you typically will create when you're working on your strategic plan. But today we're going to talk specifically on things that you can do to impact your financial goal with your business. And it doesn't matter how big or how small your business is, how long you've been in business. These are some tips that hopefully you can apply today to help you look at ways to increase your overall profit, but focusing on the financial side of the business as you're doing so. So we're going to talk about goal setting. We're going to talk about the SWOT, some of the areas that you need to consider as you're looking at some of your goals. We're going to look at some foundational areas or goals that will be a part of your business. And if you're not looking at these areas today, it's something you should consider looking at as you move forward. And then we're going to finish by doing a SMART check, making sure that your goal is really something that you can accomplish and within the time frame that you set for yourself. I always like to include a scripture that's related to the topic. So this one that I found that kind of applies to the topic for today. So first, getting started, the strategic plan. There's several sections within the strategic plan. And today, again, we're going to focus on the what. The one what is being the financial piece of it, setting your goals with for short-term, long-term, and then what are some of the measurables so that you can determine if you're really on track to meet your goal. You want to always have timelines as a part of your goals so you can really work towards achieving those goals and doing the things that you need to do to accomplish those as you move forward. Starting with the SWOT, and the SWOT is intended to help you think about some of the things that may be going on in your industry or some of the things that you may need to work on personally or as it relates to the business. But if you're not familiar with what SWOT actually stands for, it is your strengths. So what are some of the strong points about your business? What are some of the strong points about you as a leader? What are some of the strengths of the members of your organization? Being able to know that what your strengths are, you will be able to help leverage those as you continue to build your business out and define what your goals are. Again, whether it's financial or some of the other areas within your business. The weakness is pretty much the opposite. What areas are you not as strong in? And the weaknesses are not meant to be a negative. It's really to heighten your awareness. Things that you may not be as strong in, but you may have a team member that's stronger in that area. So when you start looking at who should be assigned certain tasks, maybe you can assign it based on the strongest person in that area. Or it may mean that you need to go and get more training and development. Or it may not be a factor at all, but just an awareness that it exists and that you want to know that it's there and not try to set a goal that requires you to leverage that weakness when that's not your strong point. And then opportunities. Opportunities within your industry, within your company, that's something that you need to be aware of. So again, as you're setting your goals, you are going to set your goals based on some of the opportunities that you know are available. And I don't know all the different industries that you ladies are in, whether it's your business or your professional career. We all have areas that our industries are impacted by. And there's also opportunities that we know we need to be able to leverage those opportunities. And I think this pandemic, as much as I hate talking about the pandemic, but it's real. There is a lot of businesses that had to close their doors, but it's also created a lot of new opportunities. And we are seeing a lot of new businesses starting to develop, and they're able to take advantage of some of the downsides of the pandemic and turn it into an upside. Threats, kind of the same vein as the weaknesses to a degree. There's things that are out of your control that you just can't do anything about, but being aware of those and being able to have another plan or compensate for whatever that threat is, you can better prepare yourself to find either another way to do it or a better way. Sometimes you can find a better way to do it. But again, being aware of it so that you can make whatever adjustments that you need to make so that it doesn't cause a negative impact on your business or have a negative impact on your business. And then finally, trends. What are some of the trends that's going on in your industry? Knowing that, say maybe, I came from a semiconductor industry. One of the trends was where we had to change how we process some of our products and some of the materials that we use in our products. So we had to be aware of that trend. And as we develop new products, we made sure that the chemicals that were no longer allowed were not in our new products. And that allowed us to continue to develop the new product and be able to sell those without having any repercussions of selling inferior products or selling products that had contained chemicals that were not allowed in the final product that we were shipping. The foundational goals, these are the 7 areas that I mentioned earlier. If you are trying to figure out what your goal should be, what area should you focus on, and you need a starting point, I recommend looking at these 7 areas as a starting point, because these are 7 areas that every business has to have some type of system in place, or they may have to have a department or just have some relationship as relates to these 7 areas. And they sometimes are all connected or they may overlap, but if you don't have goals in place as it relates to these areas, or have some processes and procedures in place as it relates to these areas, this may be a good starting point for you as you develop your overall goals for your company. But today, because we're talking about the financial, we want to focus on the 2 areas that impact the financial goals, and that's sales and finance. Sales is kind of a broad term, but there's different areas within sales that can help you drive your business. So obviously knowing who your target customers are, and your sales team needs to be trained and developed on how to sell those products or services to those target customers. They need to know how to identify those target customers. They need to be able to assess the needs of those target customers. So when they're trying to inform them of your product or service, they're not trying to sell it to someone who has no use for it. And then if they have additional questions, they need to be able to get the answers for the customer so that they can then do a better job of reaching the right customers, selling the products to those customers. And with that, there's the customer service side of sales. as I was mentioning earlier to Tracy and Donna Lisa, my life symbol is the triangle. And when it comes to sales, I think of sales in the form of a triangle. The first part is you do have just the order taker side of it. And that may be a customer who just, they know what they want. They don't need any product information. They don't need for you to try to convince them that they need more or less or whatever. They just need for you to take the information and process their order and then make sure that it's delivered on time. Then you have the customer service side of the triangle. Customer service side is making sure that the order is going to ship on time. If there's any issues with the order, being able to communicate that to the customer, make recommendations on options for the customer, being proactive with informing the customer of any thing that's going on as it relates to their order. It may even mean making suggestions on other products, even if it's not something that you sell, to be able to find them option because whatever reason your order is going to be delayed, and you want to make sure that their production isn't impacted, or that there's anything that can prevent them from doing their part, running their company because you can't deliver your product. And then you have the sales side of the triangle. And again, that person needs to be able to basically own every other piece of the account, including making sure that they're getting quotes at in a timely manner, that the pricing is fair, we can meet the delivery, and then answering any and every technical question that the customer may have, or bringing in other resources to assist them as they continue to build a relationship with that customer. The other area that impacts the finances, or the overall financial side of the business, is finance itself. So that includes bookkeeping and accounting, which most of us know that that's two different things, and making sure your taxes are up to date and that your banking is in line. And this is the area when we hear the term know your numbers. That's usually as it relates to the financial numbers, understanding where all your expenses are, where your revenue is coming from, making sure that the accounts that your books are supposed to be aligned to, making sure that everything is in the proper categories, so that when you start reviewing your records, you understand where all the numbers are, what's driving those numbers, if there's areas within those numbers that you can impact, and really keeping a handle on the overall finances of your business. And one thing with these 7 goals, or 7 foundational goals, is you don't have to do it, but you need to have someone doing it. These are all services as well that can be outsourced. You don't have to have them in-house, but you need to have someone that you have either on retainer or that you can contact as needed to provide these different services. But you still need to be aware of each of these, so that if there's any kind of disruption to your business, you need to be able to know which department you need to go to and need to address whatever that issue is. And then also the upside of all of this is how we're driving our business. I don't want to imply that we're always having problems. I think, especially when you look at the SWOT, the opportunities, what are some of the opportunities that you have to grow your business, making sure that you are positioning yourself to leverage any opportunities to grow your business. And each of these areas can impact you being in a better position so that you can grow your business. So now I want to do a little exercise. So I would like for everyone to take a few moments and just write out 1 or 2 goals that you may have as it relates to your finances. These are just some suggestions or some ideas that may impact your finances, but you obviously have others that may come to mind. So if you want to take a few moments to just write out 1 or 2 of your goals as it relates to your finances. Now I want you to take it a step further, and I want you to be more focused and more specific on what that goal is. So the one example of how you can reduce your finances or improve your financial situation with your company is the reduction of invoice terms. And on one side, you're trying to reduce your terms as relates to your vendors. The vendors are the people that owe you money. So can you negotiate with them to pay you in 15 days instead of 30 days? And that's obviously going to put more cash in your account sooner than later. And so it puts you in a better position for you to pay out to your suppliers. So when you look at a goal like this, you want to say, I want to reduce my terms to net 15 for my vendors, but we want to make it a little bit more defined. So we want to say, maybe look at invoices that's over $500. That's getting a little bit more specific. Then we want to look at it, take it another step and say, let's look at the next 30 days. Let's look at all of our invoices that's due within the next 30 days, that's over $500. And then those could be the vendors that we want to target to start looking at how we can start changing the terms with them to reduce them from 30 days to 15 days. Doesn't mean that you're going to just make the change, because there's still the communication piece. You have to make sure that you have the discussions with your vendors to give them advance notice that you're going to be changing their terms from 30 to 15, but it's your starting point. So those are some of the steps that you want to take to notify them and have an actual effective date. So looking at all the accounts or all your vendors, and you can actually just look at the ones who on average have invoices over $500 as an example, and then just focus on those. And then as you determine who those vendors are, then you can make your plan to say, I'm going to notify all of the vendors that typically have invoices over $500, that their terms are going to change from 30 days to 15 days, and then the effective date. And then that's one task. And then you can see how much money that's going to bring in sooner than later. And that gives you an indicator of the impact of that particular action. Then on the other side, the people that you owe, you may want to look at which suppliers you're paying within 30 days, and then negotiate longer terms with them so that you can hold on to your cash a little longer. And that too, there's steps that you need to take by first starting by looking at which vendors that you have terms with as 30 days or more, or 30 days or less, excuse me, 30 days or less, and then start negotiating with them to increase your terms to 45 days. And or even 60 days if you are a good negotiator, that you can make that happen. But the point is to look at ways that you can get your money faster and then hold on to it a little bit longer. And you also want to, that this allows you to make sure that you have the funds in your account to pay your suppliers when they're due, so that you're not challenged with a cash flow problems, a problem that may lead to some other areas that you have to address. But if you can negotiate something like this with on both sides, your vendors and your suppliers, then that leads to more cash for you to work with to manage your business on a month-to-month basis. But hopefully it's clear on that, on being more specific on what you're going to do and when you're going to do it. Then when we do the SMART test on that, is it very specific? Is it measurable? Yeah, you can measure how many vendors you touched and the outcome of those conversations. Is it attainable? You should be able to determine that based on who the vendors are, based on your relationship with them, if you think it's going to be something that they will be open to. Is it realistic? It should be. I think something like this is truly realistic. And what's your timeline for it? 30 days to start looking at the accounts, but then say maybe 60 days to actually complete the exercise of evaluating each of your vendors and starting the conversations. Another area you can look at is your bank fees. If you are paying fees because your balances are too low, maybe by getting more cash into your account, that's going to help you keep your balance levels at a level that allows you to get free banking. Or if you're billed based on the number of checks you write, assuming people are still writing checks, I think that was one of the measurements years ago. But if that's the case, can you do electronic transfers to reduce the number of checks that's being processed? Whatever the criteria is that cause you to be charged bank fees, look at those and look at how you can possibly reduce those. Increasing sales by a certain dollar amount by the end of the calendar or your fiscal year. What are some of the things that you can do to make that happen? One, you can start out by, is your sales team trained and doing the best job that they can to reach your customers and to grow the sales within your customers? If not, maybe it means getting more training for your sales team. So you may want to start having weekly or monthly training and development for your sales team so that they can start selling more to your customers. You may look at how many products do you offer? How many products is each customer buying? Can you sell more of your products to the same customer so that you can obviously increase your sales with that particular customer? Sometimes you may have to raise your price. This goes back to the SWOT. What are some of the trends in your industry? Are prices starting to go up because the product that you sell is more valuable? You may need to consider raising your price for whatever your product or service is. Customers that have kind of gone away that you haven't sold anything to for a period of time, reaching out to them, trying to re-engage with them to see if you can sell them something now, or if they still have a need for whatever your product or service is. One of the industries that I am always baffled by when it comes to selling and continue to sell to existing customers is the hair industry, or the stylists or nail techs. One of the things that I notice is once you leave your appointment, they never ask if you want to schedule your next appointment, at least the places that I've gone to. They never check to see if I like my haircut or hairstyle that they gave me. And chances are, if I don't like it, I may go to another stylist. But that first stylist never checked back to find out why it didn't come back. And I think it's a missed opportunity for that industry, that you should be asking your customers if they like your service and they like the style that you gave them, or try to get them to schedule their next appointment when they're checking out. To me, that's a little thing that can reassure that you're going to have customers in the future. But that one just always baffled me. But whatever your business is, if there's opportunities for you to continue to get repeat business from existing customers, that's one way to make sure that you're increasing your sales. How do you measure it? Obviously, more sales. But when you want to get it to be more focused, you may want to say you want to increase by a certain dollar amount within a period of time. If you have a seasonal business, you know you're only going to generate so many dollars during that season. Making sure that you are positioning yourself to increase your sales, and then how you're going to increase those sales. So again, if you are selling more, or if you offer more than one product or service, try to get your existing customers to buy at least say two services or 3 services, and then incrementally increase your sales that way. The other side of increasing sales is reducing expenses. We have different areas that we can dig into as it relates to expenses. One, again, is the bank fees, trying to reduce those. You may look at your products that you're buying and see if there's a lower price someplace else, if you have options for buying supplies or equipment or materials to run your business, doing some price comparisons over a period of time to try to find areas that you can reduce your expenses. One of the examples I have with this is when I was working with a car detailer, and he was buying drums and drums of but the soap that he used to wash vehicles. And he didn't know how many cars he could wash out of one drum of material. And then he also was paying more than market for this drum. So once we started tracking how many vehicles he was doing out of one drum of materials, he was able to see, one, that his car washers, or the guys that were doing the cars, they were using too much product. And so he was able to work with them on using less. And then he was also able to do a price check, and he found another supplier that sold the same product for less. So he was able to reduce his expenses that way. And then the other area that impacts your financial is how do you increase your profits. And that, again, kind of, as you'll see, or as you probably already know, a lot of this is all tied together. So you increase your sales, you increase your sales per customer, and you reduce your expenses, and ultimately your profits will increase. And that's what we can really take to the bank, is more profit. And again, whatever you write out, make sure that you do the SMART test. You may have to tweak it a little bit to make sure that it truly is something that you can achieve. Because at the end of the day, you don't want to create a goal that you're not going to achieve. And we want everybody to be successful, but we don't want you to be deflated either because you set a goal that's not realistic. So whenever you're writing them out, just do the test in your head, do the adjustment if you need to. And then another thing that's important is to stay focused. You can't allow other people to say, "Oh, this is a better idea. Let's move to this. Let's try something different." By having your goals written down and you being focused on those goals, that allows you to not just jump just because someone makes a suggestion or a new idea will pop in your head. You need to write it out. And if you need to make adjustments, make sure that it's a calculated adjustment or it is a strategic adjustment, because if you jump just because the idea pops in your head or pops in someone else's head, you lose focus, and then you really miss the opportunity to hit your goal. So this is just a snapshot of a pyramid of some of the things as it relates to your strategic plan. But the one piece that's here that applies to all your goals is having the schedule and then accountability. If you're not keeping yourself accountable, or you don't have someone that's keeping you accountable to make sure that you're staying on track or completing the tasks that you need to complete so that you can achieve your goal, then you run the risk of not hitting that goal altogether. These are some of the reasons why strategic plans fail. Some, I'm sure some of you are already familiar with. One of the main ones that I focus on is the accountability and follow through. If you're not self-disciplined, then you need to have someone that is going to push you and hold you accountable so that you continue to stay on track to achieve your goal or goals that you have. And that is it. Thank you again. And if you have any additional questions, I'll turn it over to Ms. Donna Lisa now if there's any questions.
Yep, so we do, that was great, Shirley. So we do have a question from Darlisa on our Facebook live stream. She asked, if a vendor is not willing to negotiate, is that an indicator that they may not be a good fit for your business?
Not necessarily. It just means that you just have to accept that some vendors are not going to be willing to negotiate the terms. But you also have an opportunity to see if there's other vendors that supply or do whatever that vendor is. So if there's other things that you can do to negotiate with them, maybe if you're buying a product from them, maybe buying more products from them, and even if you schedule it out because you don't want to necessarily buy more just for the sake of getting a lower price, but you may want to see if there's a way you can buy more and schedule it out over a period of time, so that that may be another option for you. So you're still holding on to your funds a little bit longer and not necessarily paying out right away. But if I think that it's not realistic to expect everybody to agree. So you take the wins that you can get, and then if it's a I guess big enough account, then you have to make the decision if it's worth it to move on to another option, or if you just accept the fact that this particular one is not going to negotiate, and then work on the ones that will, because you may get enough of the other ones that will still have an impact on your goal of reducing your expenses as it relates to a vendor or a supplier.
Okay, great. So will banks negotiate fees, or is it better to find a bank without fees?
Some banks will negotiate fees, and again, it depends on the bank. And this is probably a really good point for a startup. Shop around before you decide on a bank, and build that relationship with your bank, and understand how the fees are calculated. But there are some banks that don't charge fees. So that's a matter of finding one that works for you, that either if it's based on balance and transaction, or if it's based on just the type of account you have. There's different banks that have different policies on that. And also, don't forget credit unions. There are some credit unions that do business banking, and they are a little bit more forgiving as it relates to some of the fees that they charge for business customers.
Okay, great. So as a service-based industry, would increasing sales through an incentive program be a good idea?
Yeah, because you can still base it on their performance. You're not going to give them a bonus just because. So if they can reach certain milestones, that's a great way to increase your sales, and that's very common in sales roles, that there's some type of incentive that's tied to it.
Yeah, I know my husband is, he has the Starbucks app, and he's always trying to, collect the stars. You know what I mean? So he probably buys more coffee than he really needs, because he's always trying to grab that next star, that next incentive. So,
Yeah.
yeah. And, Starbucks is up there going, woo, so yeah.
Right. Yeah. It's kind of like you see something on sale and you say, oh, it's on sale for this price, but you have no use for it. So
Right.
it's really still not a good deal. So you just have to weigh at the time what it is and how much you're willing to pay. But again, as it relates to a sales role, it's not uncommon to have sales incentives. And a lot of times it's also incremental, based on either the profit or the top line sales. If you are trying to figure out if you want to offer a sales incentive for your sales team, I definitely would recommend basing it off of profit if you can, because it doesn't do you any good in the end if you're just going to base it off of top line sales, and you're losing money on the overall transaction.
So we have a wide range of entrepreneurs on here. We have some that have been in business for a super long time, and some that are just actually getting started here in 2020 in December. So what would be some financial goals for somebody that's just starting out? Like, what would be, I know as you're kind of been in business for a while, increasing sales and reducing expenses, but what would be some of those that could, as we're stepping into business in 2021, what are some great financial goals to have?
Uh, One is, I would say, making sure that when you start spending money on things like marketing, make sure you have a marketing plan. And when I say marketing, I don't mean just social media. You need to really understand who your target customers are and the best way to reach them. And then um, that's where you want to market, but also have some expectations on your return. So if you are putting in a marketing plan, you want to hit or reach X number of clients. And then uh, I would say do it in have plans to do a short-term evaluation. So say you stick with it for 30 days, then evaluate it and see if you're hitting the number of clients that you were expecting to hit. And if not, why not? And then make some adjustments. When you're new, you have a lot of opportunities to go a little bit slower and make adjustments as needed versus putting together a plan that's for a full year and then not really have a solid plan on how you're going to hit that goal or how you're going to increase your sales in that area. And then the other pieces is uh, if you have to get a financial institution, that's a good time to look for banks that's willing to work with startups and hopefully have fewer fees that's associated with your account so that you can not pay out in a lot of fees. Um, and then if you need a sales team, there's different rules of thought on, do you do a W-2 or you do a 1099? And that again ties back into those 7 foundational areas. Talking to an HR professional to help you evaluate what's the best way to bring someone on board. Should you do a 1099 W-2? Do you need someone full-time or can they get the job done part-time? So, and uh, do not hire family and friends just to give them a job. Making sure you're hiring people that's skilled in the areas that you need them to be skilled in, and making sure that you have a job description with expectations and hold them to those expectations. Uh, at the earliest stages as possible, put in those disciplines where you're doing regular reviews on the performance on every position within the organization and continue to measure those and holding people accountable, including yourself.
Right.
If you are not one that are self-disciplined, get someone who's going to hold you accountable as well.
Yeah, Darlisa put hashtag preach when you were talking about hiring people that not family members. So Marcia Dunn, she wanted to know, one of her goals is to establish business credit. Any suggestions?
Then that's an area that I have partners. So if there's something that I'm not as knowledgeable on, then I refer to one of my partners on something like that. But the one thing that I was told that you definitely need to get a DUNS number so that can start tracking your business activity. And then I would say have a conversation either with your banker or with someone that specializes in business finances as it relates to business credit. But you want to do things like you should be doing in your personal life, paying your bills on time, making sure that you're not overextending yourself as it relates to your line of credit, or if you have business credit cards, try to figure out what's a good ratio of debt that you want to have as it relates to your expenses, and then continue to manage that. And if you're trying to purchase some major equipment, understanding what some of the terms are as relates to that purchase, so that you can build that into your negotiation with that vendor. But and then the bank or your whoever your financial advisor is as it relates to your business, they can help guide you in that process. And I always say, ask the questions before you make the purchase, uh, so that you know what your options are and hopefully minimize any mistakes.
So the good news is we actually in March, we will have Casina Sheets. She is specifically deals with credit for small businesses, and she's going to be coming in and doing a talk about that. And so we definitely will have her in March, and we're excited about that. And so we've got one more question from Patty's iPad. Suggestions on how to reduce credit card processing fees.
Trying to, if you can, try to get your vendors to pay, like doing a bank transfer, because you have that as an option. If, especially if you use something like QuickBooks, they can do a bank transfer through QuickBooks, or I'm a fan of Zelle. And I would say anytime you can get people to pay using one of those tools, or even bank bill pay, it reduces your credit card fees. And that's another area too, though, that you can shop around. I know there are some merchant services that they they charge you based on the number of transactions that you have per month. So you may want to do a little shopping around for that to see what some of your options are. But for me, at the end of the day, avoiding using a credit card as much as possible. Anytime you can do any bank-to-bank transfers is probably the number one way to reduce those. Because even with PayPal, if it's a business account, they charge a percentage for the transactions.
Awesome. Do we have any more questions? All right, Tracy.
Oh, thank you, Shirley. That was great information and a lot of things to think about, but I like how some of them were just really easy changes people could make, or really look at the numbers and, you know, cut back that way or help them save. So thank you very much for presenting today. So nice to have you. All right, we've got a few things coming up. First, we have this week, Thursday night, we're going to have fireside chat with corny dog heiress Amber Fletcher. That's going to be from 5:30 to 7, so you can go online now and register for that. She's going to talk about how her family had to pivot during COVID. And if you're a business that just makes your money in 1 month of the year, you will be really learn a lot from this session on how they had to pivot. We also, 2020, our next Women Rise is going to be January 12th. It's going to be Brian Silver. He's going to talk about 2020 taxes, updates, challenges, and the unknown. This is really important, though, because people have gotten grants, PPP loans, EIDL. There are tax consequences to all of that. So while it may not be our favorite subject, always paying taxes, but this should be a great session, and we're looking forward to that coming up. Donna Lisa, anything else we need to add?
Yep. So registration for January's Women Rise is already open. And just FYI, we are changing it up a little bit this year. We have connected it to our Zoom. Before, I was going through Eventbrite and sending you the emails personally, but now it's connected through Zoom. So everything that you get should come immediately from Eventbrite. So if you don't get that link right away, don't freak out too bad. But if you don't get it that morning, like an hour before, feel free to email us and let us know. We will still live stream it. So there's always that option if you didn't get the link to catch us up on live stream. And then the second thing, starting today, the Center for Women Entrepreneurs is stepping off officially in the holiday spirit with our 12 days of business tips miss. So every day for the next 12 days, we're going to give you a business tip that we've collected over the last 12 months for 2020 from our Women Rise. We will go back through and highlight something from each one of those, but it's a great way to set yourself up for success for 2021. And to be quite honest, it's been kind of fun putting it together. So I hope you enjoy it as much as I enjoyed putting it together. And it starts today, and you'll see them for the next 12 days.
Great. So that'll be on all of our social media.
Yes, it will be on all of our social media. Twitter was a bit challenging, but I think I did it.
Great. Well, thank you so much, everyone, for attending today. And to all of you, well, all of you, we'd love to see you again, but you new people, we'd love to see you come again. So thank you, everybody. Have a great rest of the week.